Good morning, and welcome to today's webcast, Enhance Your Internal Controls and More with Lean Principles. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. Today's session offers 1 CPE credit. To receive credit, you must meet the National Association of State Boards of Accountancy requirements. You must attend at least 50 minutes of the session and respond to at least 75% of polling questions. To participate in the polls, please check the button next to your answer within the slide window and click Submit. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today. We'll email you a copy in 2 weeks. If attending this webcast in a group, you must complete our group CPE attendance sheet, available in our Slide Deck and Handouts widget to receive credit. Please have all group members sign it and send only 1 sheet per group. CPE credit can only be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Good morning, everyone, or afternoon, as you were. Welcome to our presentation today. With me today is myself, Stephen Fineberg, partner in the San Francisco Bay Area in our internal controls practice. And with me is my colleague, Filipos, Melopulos, a manager in our Bay Area as well. And with me is one of my colleagues that we work very well with, Rishi, Malhotra. Very excited about being here today. As we jump into the agenda, the things that we're going to cover today are, we're going to give some context as far as lean and lean internal controls are concerned. We'll give an introduction to what lean principles are so that we'll have a good understanding of the context of which we're speaking. We're going to get into some of the elements that facilitate good lean principles and good practices. We're going to talk about visual management, employee involvement and training. And then we'll get into some lean and the 4 foundational controls, where we'll talk about an intersection between internal control and lean work, and get back to the basics with Rishi providing some really quality content as far as lean principles and what they entail. So let's jump right in. I think we all know what internal controls are. I'm not going to go to the remedial level of discussing in such detail, but as we know, internal controls are designed to provide reasonable assurance over high-level management objectives, and it's about people, it's about systems, it's about processes. And one of the key things to remember is when we talk about risk, you can't have risk without an objective. The risk is to not meeting the objective. And so when we think about internal control, the most common element or the most common objective that we think about is accurate financial reporting and documentation. But additional objectives that are rarely considered and thought of on an equal footing are how effective and efficient is management being with their operations. Also focusing on compliance with laws, covenants, policies, and regulations, so compliance. And then safeguarding of assets. And these assets can be tangible, such as cash or inventory, but they could also be intangible, such as reputation, intellectual property, et cetera. And the last element is alignment with strategy. So when we think of business objectives and risks to meeting those objectives, we tend to focus on the financial reporting element of it. This is the blocking and tackling of any accounting shop. And especially if you're subject to external audit, you're very much going to be subject to additional stringent compliance requirements. Additionally, it could go even further if you are required to comply with such programs as SOX, JSOX, MARSOX. You need a single audit. So when we're performing audit walkthroughs and processes as far as internal controls are, we typically ask the question, what could go wrong, but through the lens of financial reporting. The question that we rarely ask, that we should be asking more is, with the same level of diligence, is what can we be doing better? In other words, we focus on internal control over financial reporting to address the financial risks, but we rarely ask how we can do better, how we can do it more effectively, how we can do it more efficiently. Currently, we know in our current environment that when times and budgets get tough or tight, frequently internal audit and other similar continuous improvement programs get trimmed. Budgets are slimmer, fewer FTEs are employed, and resources are limited. So what we rarely discuss then are, with the same level of diligence that we get into financial reporting controls, is operational controls. Again, so at a remedial level, what are operational controls? Well, these are the rarely discussed neglected controls or operational controls. Frequently in SOX or in audits, they're known as non-key controls. These are still a set of processes, policies, procedures, and practices an organization establishes to ensure efficient and effective achievement of its goals and operations. The goal here is to optimize processes, manage operational risk, and enhance the organization's ability to achieve operational goals and objectives that go beyond just financial reporting. And so it covers a wide variety of business activities beyond financial reporting that include production, inventory management, sales, procurement, human resources, budgeting, and more. And so operational controls, while not particularly relevant to financial reporting, are integral to maintaining smooth operations, safeguarding assets, again, I mentioned tangible and intangible assets, and building trust with stakeholders. So we ensure that the processes are carried out accurately, consistently, and within established procedures, as opposed to complete, accurate, valid transactions that we would have in financial reporting. On a personal level, I would note that what I've found as a partner, that I'm a business owner in my own firm, and I have business challenges as well. And so while in our own firm, we have excellent systems for initiating, approving, processing, and recording transactions, how do I ensure as a business owner that I'm maximizing my available resources, that I'm smoothing operations to avoid spikes and troughs in scheduling? And how do I ensure that I'm optimizing my own processes, right? Physician, heal thyself. And so internal control goes way beyond internal control over financial reporting, as I look to see in my own business whether I'm being as effective and efficient with resources as I possibly can. Oops. So when we talk about internal control, just to sort of drive back this home, I want to make sure we fully understand the difference between internal control over financial reporting versus operational controls. Really, the focus and objective of ICFR, or internal control over financial reporting, primarily targets, again, the financial reporting accuracy, ensuring reliability of financial statements, and even compliance with regulatory requirements. Whereas operational controls focus on optimizing those processes and operations to ensure efficiency, productivity, and overall business performance. When it comes to regulatory compliance, ICFR is mandated by regulatory bodies, again, such as Sarbanes-Oxley and the PCAOB, where you have to adhere to specific financial standards, whereas operational controls, those align primarily with industry best practices and don't have the same level of legal requirement as ICFR. You would also consider the nature of the controls. ICFR controls, again, related to financial controls, report on accuracy and the safeguarding of assets to prevent misstatements or fraudulent activities. Whereas operational controls encompass a much broader range of activities covering efficiency, inventory management, customer service, and other operational aspects. One last element I'll mention in the comparison in the general sense is that even in the reporting and the documentation, ICFR requires comprehensive documentation and reporting to demonstrate compliance with established financial controls to auditors, regulators, and stakeholders. And so again, it's much more, there's an element of form, not over substance, but form is definitely a key component. whereas operational controls require documentation, but not the same level of rigor as ICFR, subject to audit and then subject to inspection. Oops. On a very specific level, we get into the element of examples that we have. So inventory. You can see from a different lens that when you're reporting financially versus operational, that each process will change as well. So for inventory with ICFR, we place a strong emphasis on accuracy and the completeness of inventory-related financial data. The controls in this area are around ensuring that inventory is accurately recorded, that it's valued correctly, and that it's disclosed appropriately in the financial statements. But in contrast, the operating effectiveness and efficiency is to aim for the operational aspects of inventory. And these are geared towards optimizing the entire inventory lifecycle from procurement to disposal. Measurements may involve automated inventory tracking systems, demand forecasting, efficient storage arrangements, and just-in-time inventory methodologies. The focus is on minimizing carrying costs, improving inventory turnover, and meeting customer demands promptly. So controls may include physical inventory counts, but the reconciliation between those accounts that's done for the physical count have two different objectives. Again, operational versus ICFR. Similarly, we find that with revenue, the primary objective with revenue is ensuring that you're recording it in accordance with GAAP. But from an operational perspective, you might want to talk about improving the efficiency of the sales cycle, or accelerating the cash flow and collection, or ensuring that revenue generating processes align with business goals. So the controls may include customer relationship management, sales automation, order processing, efficiency, and credit and collections policies to review periodic sales performance, and several other specific examples. So I think I've laid out pretty clearly the difference between operational controls and ICFR controls, and this will play an important part for the rest of the discussion that we have. One thing that I would like to point out is, in the context of these controls, there are several different types of engagements that we perform. We frequently perform controls design assessments, which are basically walkthroughs designed to, again, discover from a financial reporting perspective what could go wrong at each step of the process. We identify internal control objectives, we identify risk, we assess it, we evaluate whether there's the control design is effective, and whether it's operating effectively over time. But again, the lens here is primarily internal controls or financial reporting in preparation for audit. And so what's left behind is this element of the amount of rigor that we could be spending on some operational controls, again, to increase the effectiveness and efficiency of operations. Similarly, enterprise risk management is a systematic evaluation to apprise the design and structure of a company's internal controls and to deal with the issues proactively. However, frequently these engagements focus specifically on risks and painful risk and rarely look at upside risk in practice. So while their focus is to identify risk to the organization and business risks and address that on a concerted level, frequently it's addressing the negative elements of risk and not taking advantage of opportunities and upside risk. Additionally, it's top-down, where you're dealing with senior levels of management and less dealing with employee engagement from the bottom up. So with that in mind as the context and the difference between internal control of financial reporting versus operational controls, I want to then provide some context into what lean principles are so that we can compare them and contrast them for the next part of our engagement. Filipos, maybe you could take us through a little bit of what these lean principles are.
All right, thank you, Steve. So what is lean? Lean principles are a set of management production practices aimed at maximizing efficiency, minimizing waste, and improving overall quality. This concept has been around 80 years and also is a systematic approach to identify and eliminate waste while optimizing processes to enhance efficiency. Everyone thinks that lean principles are often associated with manufacturing and operational processes. They can also be applied to areas like internal control over financial reporting to enhance its effectiveness. ICFR refers to the processes, policies, procedures implemented by organization to ensure the accuracy and reliability of its financial statements. Now, Lean has been utilized by top performing companies in almost every industry, even government. The purpose is to reduce costs via creative problem solving, build trust and transparency to empower employees, increase employee engagement and capability, improve efficiency of processes by reducing waste, increase revenue without investing capital, and standardize and make processes consistent. Some elements of Lean. Value identification. The foundation of Lean principles is identifying value from customers' perspective. In the realm of accounting, this involves understanding the specific needs of clients and tailoring services accordingly. By focusing on services that truly add value and eliminating or streamlining those they don't, you can ensure that both your firm's resources and your client resources are utilized optimally. Waste can manifest in various forms in accounting processes. This could include redundant data entry, unnecessary documentation, or excessive reviews. Applying Lean thinking means identifying these areas of waste and implementing measures to eliminate them. For instance, adopting automated data entry systems or using standardized templates for frequently performed tasks can significantly reduce waste. A core tenet of Lean philosophy is continuous improvement. Regularly analyzing processes and looking for ways to refine them is essential in accounting. This could involve conducting periodic reviews of workflows, seeking feedback from team members, and leveraging technology to enhance accuracy and efficiency. Lean principles emphasize standardizing processes to reduce variations and errors. This can be especially valuable in the context of public accounting, where consistency is key. Creating standardized procedures for tasks like financial reporting, auditing, and compliance can help minimize errors and discrepancies. Visual cues can be powerful tools for understanding complex processes. In accounting, visual management might involve creating dashboards or visual representations of financial data to facilitate quick and informed decision-making. Visual aids can also highlight bottlenecks and areas for improvement. Pull system. A pull system in accounting involves responding to actual demand rather than pushing work through a predefined schedule. For instance, instead of generating reports on a fixed timeline, consider generating them when they are actually needed. This prevents unnecessary work and ensures resources are allocated that are most valuable. So pull system ensures optimal inventory. Smaller batches, less waste. For example, AP signing checks. If signing fewer per day, lower the chance to make an error. Similarly, in manufacturing, time need to manufacture is less, which means you can pivot to make what is getting sold. Continuous improvement involves investing in the development of your team's skills. Regular training sessions on new technologies and best practices can empower your team to work more efficiently and adapt to changes in the industry. Incorporating Lean principles into your firm's accounting processes can yield numerous benefits, including increased efficiency, reduced operational costs, improved client satisfaction, and enhanced risk management. As with a change, the adoption of Lean principles requires careful planning, consistent execution, and willingness to adapt evolving circumstances. By embracing these principles and tailoring them to your specific context, you can contribute to a more streamlined and effective accounting practice with your professional services team. Why adopt Lean? Going Lean involves methodical culture, change, and it comes with a set of tools that were developed to make such a change quick, efficient, sustainable, and enjoyable. Lean is implementation focused. A critical aspect of successfully applying Lean principles and practices with an organization is the organization's commitment to taking concrete actions and making tangible changes to improve processes, eliminate waste, and achieve the goals and objectives set forth by the Lean initiative. Being implementation focused means that the organization prioritizes taking action over theoretical discussions. Instead of merely planning and strategizing, it emphasizes executing Lean initiatives and making real changes on the shop floor or within processes. Typically, no CapEx is involved because Lean emphasizes a systematic approach to improving processes with a primary goal of delivering value to customers while minimizing waste. Lean is all about continuous improvement, known as Kaizen. It encourages employees at all levels to identify, eliminate inefficiencies, reducing the need for substantial capital investment. Lean principles emphasize improving existing processes than investing in new assets or technology. Lean principles are inherently scalable, as they emphasize standardizing processes to eliminate variations and inefficiencies. Practicing Lean across all levels empowers employees to try out their improvement ideas and positively influence their environment in a manner they know to be aligned with the employee's strategic goals. Alignment and empowering brings dramatic results surprisingly quickly. It encourages involving employees in process improvement efforts, tapping into their expertise and experience. This approach often yields significant improvements without large financial outlays. Lean also makes life easier. By aligning processes more closely with customer needs, we can often achieve higher customer satisfaction, loyalty without substantial capital expenditures, since Lean principles yield substantial benefits in terms of efficiency, customer satisfaction, and cost reduction. Intersection of Lean with internal controls. Risk identification and mitigation. Lean methodologies prioritize identification of waste, which can include activities that introduce unnecessary risks. This perspective can be extended to ICFR, encouraging firms to identify and mitigate controls that are overly complex, prone to errors, or otherwise introduce risk without commensurate benefit. Common foundation is also efficiency. At the heart of Lean principles and ICFR is a common pursuit of operational efficiency. Lean aims to eliminate waste and streamline processes, while ICFR seeks to ensure that control activities are executed effectively. By combining these objectives, firms can identify inefficiencies within control processes, eliminate redundant steps, leading to more streamlined and agile control activities. Both Lean and ICFR advocate for a culture of continuous improvement. The marriage of these principles can foster a proactive approach to enhance control processes. This synergy encourages the regular assessment of and refinement of controls, ensuring they remain relevant, effective, and aligned with changing business dynamics. Now, Lean principles encourage the identification of value-added activities, a removal of non-value-added steps. Applying this lens to ICFR can lead to the prioritization of controls that truly mitigate significant financial reporting risks. By aligning controls with the value they bring to risk management, firms can optimize their control portfolios. Lean underscores the importance of standardizing processes to minimize variations and errors. In ICFR, standardized control procedures enhance consistency in compliance efforts, ensuring that control objectives are uniformly met across different departments and business units. Lean principles emphasize empowering employees to identify and solve problems. When applied to ICFR, this empowers control owners and employees to actively participate in the design and improvement of the control processes, fostering a sense of ownership and accountability. Documentation clarity. Lean encourages clear and concise documentation of processes. When integrated into ICFR, this results in improvement documentation of control procedures, making it easier for auditors, control owners, and stakeholders to understand and follow the prescribed controls. Now, my colleague Rishi will give you more details about some application of Lean.
Absolutely. So we're getting a lot of questions in the Q&A regarding polling questions. They're coming up. We have not yet had any polling question. But if you have any technical questions as well, please, put in the Q&A. Please contact us, and we will definitely answer those. And during the registration process, we had 3 questions come in. One of them was clarification of lean principles and how do they correlate to internal audit. And my hope is that, from a technical standpoint, that question was answered the previous slides and a few others, and we'll continue to answer that question. But here, from a correlation standpoint, in the field at clients, from a practical standpoint, what we see here is an internal control. This is we're talking about the same client, and so when the internal control audits were done, this was about the inventory count process. What the inventory control people did was that inventory control should be counted by 2 people doing the counts at the same time. And what this does is gets the effectiveness of the process. Now, the efficiency of the process was taken care by the lean controls put in place. So we did a Kaizen event. We'll talk more about Kaizen events really soon. But when we went in, the lean team went in, you're able to reduce their inventory count, the time involved in that from 40 hours to 3.5 hours. We rearranged the entire warehouse, used lean principles. For example, nothing that had to be pulled this was about the kitting process. Nothing that had to be pulled was above shoulder level. So you did not need to move the forklift vertically to pull any material. So we were able to reduce the kitting times by up to almost 70%. And the impact of the inventory count, reducing that from 40 hours to 3.5 hours, using the same resources in the current state and in the future state, had a $1.14 million impact. So this is how lean and internal controls correlate, and this can be done in any and all processes. Back to you, Filipos. There's a question here.
Yeah, we have our first polling question for today. When was the last time you assessed design and operating effectiveness? A, never. B, the last 5 years. C, within the last year. And D, yesterday. And we'll give you about 30 to 40 seconds to answer this question. This is our first polling question of 4 today. You will need to answer 3 polling questions to receive CPE credit for today's webcast.
There's a question on the side. Chad, is it okay for me to answer some questions which are in the chat right now or now?
Yeah, go ahead.
Yeah, so I think even we have worked with companies as small as 3 million, as big as 65 billion, we are in Bravo. And I think lean applies everywhere. And the other thing is, even if the 2-people firm does not matter at all, you need process thinking. And once that comes in, it'll improve your process which you're currently doing. And we have used this in legal departments, IT, HR, accounting, finance, everywhere in all industries, hospitals, manufacturing, aerospace, medical devices, R&D, wherever. So, I think that probably covered 2 or 3 questions that were being asked. Back to you, Chad.
All right, thank you, Rishi. And we're going to advance to the results here, and I'll let you all speak on those.
Great. Well, you can see there's a pretty good spread of responses here. One that's, I don't want to say alarming, but there's an opportunity for definite improvement under the never. That's approximately 20%. But I would say most folks have looked at internal controls in the last year, and so that's a very positive step. But per our comments in the presentation so far, my inclination is that the assessment of these internal controls have been primarily on ICFR controls and less likely on operational controls, and how to make items better, how to perform items better. So let's jump right in here to the next section here of visual management. You know, Filipos mentioned standardization and visual management. And the goal, of course, is to provide clear and concise documentation. So central to the essence of Lean is this commitment to maximizing value while minimizing waste. And one of the instrumental ways that Lean achieves this objective is by employing visual aids as powerful tools to enhance the effectiveness and efficiency across various aspects of the organization. So let's delve into some of the ways in which these visual aids promote effectiveness and efficiency in a Lean context. Process mapping. You know, visual management is important as you visualize the end-to-end process and financial reporting, from data collection analysis to generating reports and communicating results. So identifying each step and sub-process involved, highlighting where the bottlenecks and redundancies and efficiencies can occur, it's a great tool. That's, of course, a very comprehensive understanding of the documentation, because in practice, visual management and flowcharts play a crucial role in conveying information, especially when considering Lean principles. But in the context of the work that we do, again, the focus is primarily on internal control over financial reporting and what can go wrong in that context. But these visual aids are great practices that greatly aid in the streamlining of processes, identifying inefficiencies and enhancing overall transparency. In other words, when one thinks of operational controls, they tend to think of inventory and accounts payable throughput, but it can also be in services like accounting, which we've done as well. So as we know, I mean, process mapping illustrates a sequence of steps, provides a clear depiction of the various stages, and serves as a foundational tool for continuous improvement. And again, that continuous improvement is frequently with the lens of that ICFR. So as we conduct walkthroughs, or create process documentation, we make flowcharts all the time. They look something like this. And again, the information, all the information is there, with the goal of proving out assertions relevant to ICFR. And so these flowcharts can be robust and useful for their ICFR objectives, but you're leaving a lot of opportunity on the table. What about all the other objectives, particularly to the effectiveness and efficiency of operations, and not just their accurate recording? Note that you can make an activity more effective while being less efficient, and vice versa. But flowcharts, they can be time consuming if they're performed in sequence as an activity itself. You know, can lead to iterative processes. And so there's something left on the table here. And what's missing? Well, again, these can be, while extremely useful, and I highly recommend if you're in narratives and you're going to move to enhanced process documentation, that you move to visual documentation. But it can be very time intensive. Multiple sequential revisions and iterations of potential versions, you know, can be a slog of time consuming elements. And then sometimes there's frequently a lack of enhanced collaboration and communication among the team. So also what's missing are some of the operational elements of pain points. What is it about this step that is a pain point as far as you doing your job? What could be done better? And if we could project a better environment, I always use the magic wand question. If you could use a magic wand to change your role or your job, how would you do that? And so really there's a more collaborative bottom-up way to maximize employee engagement and to ensure that you're getting a meeting of the minds. So Rishi, why don't you share with us your thoughts on another approach on how to do this activity?
Absolutely. Thank you, Steve. And so, again, please keep the questions coming. In the chat, you'll definitely get back to everyone. And so, you know, the question, you know, back to the question, correlation of Lean principles and internal control. In this case, we used Lean to improve the internal control, the internal audit process. And the results were pretty amazing. I know a lot of finance people are on this webinar, so you'll love this. And what you see is a whiteboard, and this is an electronic whiteboard. Now the tool is not the key thing here, you know, the tool being electronic, but we have done the same thing with stickies on a wall. You know, pen, stickies, a blank wall, it's the same thing. So, you know, we're not talking about the tool here, but what happened in this case is what typically happens, in the olden days, I would say, or in the current days, the accountants or the people auditing would sit with one person, you would go through the interview process. What's your process? And they would, interview you, go back home to the office and map the process out, then come back to you. Is this what is reflective? Then you would say yes or no, make the changes. Then another touch point to make sure it's good. Then you would talk to the next person in line, and he or she would say, no, that's not how I do it. It's very different for me. And so what we did in this case is, this is a whiteboard, it's an electronic whiteboard. I think Apple has it on the phone, but we don't use that as, it's a free tool, but it's more platform focused. And so what we did was, again, we're not selling the tool here, so we will not take any names. And we use this whiteboarding tool, and everyone who was part of the process was able to participate at one go. And whatever disagreements were there, guess what? They were clarified at that point. And those purple lines, I think it's light purple, pink, whatever that color is, you'll see, it was done in less than 1/5 of the time. We mapped all the processes. The entire process was done really quickly, which all the customers love, which all the clients love, and which the accounting firm loves as well. And so I'll go into a lot of, we can't read anything on the stickies here, that's on purpose, but I'll go into more detail. Here, as an example, in this case, it was the deductions process, and we mapped the current state. You see that in yellow, and it was live. And so the people who work, not just the managers and the directors and the C-level, whoever works on this process was part of this exercise as well. And you have no idea how empowering this is. People have told us that the first time in 17 years we have been asked, for a suggestion. And so very empowering for the entire company, for the entire people who are working this process. And so what we did in yellow, the lean team, the internal audit team was putting the controls in purple. And so that's happening at the same time, and everyone can read what's happening. And so if they have a question regarding that, if they have a concern or the practicality and so on and so forth, the questions are answered there and then. And if anyone has a question, they can talk about it. If they are shy, they can highly related industries. Okay, and you can ask any questions. If you want to put any questions, absolutely, you can put those. They're answered there and then. We just try and use different colors so that it's more obvious to everyone. And something which the client was not expecting. So in blue are the pain, P-A-I-N, pain points, which the owners of the process, the people who work the process, could put up there. And there was process improvement going on at the same time. So internal controls, bringing up the pain points with the process, and not all solutions can be put at the same time, but now 20-30% of the solutions in the process was improved, and all these things were noted, and ultimately we improved the process a week later. So I think there's a question on highly regulated industries. We have done this in pharma, which is extremely regulated, and it's even easier there. In medical device manufacturing, we have done that. In hospitals, we have done that quite a lot. And so this is pretty amazing. I think there's no, and I think, where we talk about, I think there's some, with the big three, there's some, labor issues going on. Even in those environments, this lean works really well. So back to the presentation, I think, and please keep the questions coming. We will definitely get back to you guys. And so this was, something amazing which the client did not expect. And so what was the ultimate result of combining lean and internal audit? So lead time reduced from 4 months to less than 2 weeks. So we started on, let's say on the 1st, by the 15th we were done. And typically these things take 4 months, right? So the client was completely, bowled over. The cycle time, so that's within the 2 weeks, the actual hours that would have been utilized, and we use this as a percentage here, it was actually less than 80%, we were able to reduce that. It was just embarrassing to put more than 60% reduction. And we were able to get that done in less than 80% of the time for the client time as well, and for the consulting firm client from a consulting firm standpoint as well. And when we had the first session, the customer was telling us, hey, when are we having the next session? Instead of us, the consulting firm, hey, when do you have time? When can we come back to do these things? Everyone was in agreement. What that means is, we didn't have, there was one shot, everyone got that shot, everyone participated, and we had the map, the controls, all the stuff in one shot. Everyone agreed to the process, because when you're doing the process, everybody was participating. Reduced communication from the consulting firm. This was, hey, everyone has 450 emails every morning. There were 50 less from the consulting firm, because now the client was actually asking us, hey, when can we do the next one? And we'd say, let's do it now, or on the 5th, or whatever it is. And the client really got a lot more from this, because everyone was participating. And the pain points, as an example, it was completely amazing for people, for management and officers to learn the pain that people were experiencing. So next question, over to Chad.
Thank you, Rishi. Our second polling question for today: what is your level of familiarity with lean principles and methodology? A, lean what? B, we monitor some KPIs, but meh. C, we have had an occasional Kaizen. D, we have a robust lean ecosystem. I'll give you about 30 to 40 seconds here to answer this polling question.
So I just saw a question on the side. What AI tools help to streamline these processes? I just thought of this one. So we definitely use AI, which is actual intelligence instead of artificial intelligence. I just made this up. But the key thing is using the intellect of the people. People being the biggest asset of the company gets the best results, and that's what our experience has been. And I just made that actual intelligence up, AI. So we definitely use AI.
Great. I'm going to advance on to the results here.
Perfect. Well, you can see probably the most common response is we monitor some KPIs, but meh. We had a big conversation about whether meh was actually a word or not. But in the interest of time, we'll continue onward. I think that there is some activity here. The lean what, in other words, never worked with lean before, is still about 20% of you. So Rishi, why don't you continue onward as we proceed?
Absolutely. So employee involvement and training, and that was the actual intelligence I was talking about. I think the best results come from there. And the reason for that is, if we have lots of CFOs and financial people, if you want your objectives to be met, you kind of have to involve the 99.99% other people in the company, and have them help you achieve your goals would be the best way to achieve whatever goals you have for the company. And the reason why lean is so powerful is that there's buy-in. As we just described what we did with the improving the internal control audit process, everyone participates, and when that happens, there's ownership from the people. So we don't need to do any change management. And of course, this is an everyday process with this continuous improvement every day. And there was a question inside: do we need the black belt to do lean? No, not at all. You need to, if you start with a green belt, that would be even better than starting off with a black belt. Okay, so one way to start with lean, there was a question on that as well, is a Kaizen event, and this is a high energy, high impact event. And I said 5 days long, and as I said, it applies to all departments, ordering food, anything, admin processes, anything and everything. And so we start lean, we start with a charter on, with the executive team or whoever is, owns the process, and we decide on what we need to achieve during that week. Reduction of cycle time by 80%, space savings, reducing work in process, inventory, reducing the check-in time in a hospital, reducing the number of forms that patients need to fill out, or customers in a casino, as an example, or while doing some SOPs or whatever it is. Those objectives are defined in the charter, and the team that's going to do it, we do it about 2 or 3 weeks prior to the Kaizen event. And we have gone till 1 a.m. in the morning. How exciting this is! People tell us that we've been having this problem for 10 years, 15 years, 30 years, and suddenly it's being solved. And they are part of that process, which is very empowering. And so this is one way to solve it. And the key thing is, there's an ROI of at least 1 to 10 every time. And this is not about capital. If you buy $100 million SAP system and it'll solve your problems, it does not. So the focus is not CapEx. The focus is definitely zero CapEx and AI, actual intelligence of the employees. And the lean and the 4 foundational controls, we actually had pictures here, but for secrecy needs and those kind of things, we took the pictures out. And so in this case, this is a food client losing $200,000 every month and had no idea. And they told us, nobody can even steal so much food. So we're not worried about employees stealing food if we don't know where it is going. We have no idea what's happening. Can you please help us? And what we did was we put an 8 feet by 4 feet whiteboard, which this drawing, I guess, represents. And what we did was 1 day prior, we had of the changeover to from product A to product B, we had people write on a whiteboard what are the ingredients needed. And then we had the supervisor make sure we have those ingredients. And the color, the key thing is the color there. You see driver 1, driver 2, green, red, blue, and black. We have 4 forklift drivers. And we, for each recipe, we said, what's the quantity? We need 4 pallets of rice puffs or whatever it is. And so each driver would say in their color that they have taken 1 pallet, 2 pallets, whatever they've delivered to production. And when production said we need the 5th pallet, they said, talk to quality. We don't know. The recipe says it's 4. The red driver has delivered 1 and the green driver has delivered 3. You guys should have as much as you need. Please talk to quality. And so and what we found out was that each bar, this is a health bar company, instead of 100 grams or whatever the weight is, 120 and 30. I mean, it was about 50% more going in each bar. And so a simple whiteboard eliminated a control, eliminated the need for a $10 million system, and it being accurate while all the segregation of duties, account reconciliation, etc., were being followed. But back to the basics, I think keeping something within control, within a tolerance band is what a control is, and a process which has which includes these, which are controls inherent to the process, is what we call inherent controls, and that are what is a good control. And in a good control, the quality is always up, as we just discussed, and the overhead is always down. This is another example where a simple sheet. This is a chemical company in Southern California, and we were able to reduce. So this is on the racks, on the warehouse racks. We printed these labels. And we put Velcro behind them. And so, of course, we put the covering so that the Velcro does not tear the paper. And so if a pallet was used, we would take this thing, you would remove this label, give it to production, they would make it, and production would know. And so, know where to put it back in the warehouse. And so with that, you're able to reduce finished goods by 78%, store space by 47%, and lead time by 25%. And this, the lead time reduction, increased their sales by about 40%, because now the service provided to the client was a lot faster. So again, simple controls put in place, lean controls put in place, eliminate the need for a $10 million software, as an example. And in this case, this is back to the food client. We changed the product labels, the labels that go on each pallet. And so if you see at a mixing station, if all the products had a square, and one of the products had a triangle, it's like, oops, you're making a mistake. So now, if you know Spanish, if you know English, if you know Japanese, whatever language you know, a square is a square in any language. And even me, who does not know how to make a recipe, can figure out that there are 12 squares and one triangle, there's some issue going on. Let me correct it before anything else happens. So again, a simple control put in place to improve quality. Lean control and problem solving in the client issues. I think what we hear the most in the field is, finding and hiring people to grow a company. That's these are four issues we have heard the most. Combating increased lead times, and suddenly people have lots of orders now, and the lead times have grown, and the customers are dissatisfied. Upskilling talent, and internal communication is really bad. These are four things what we have heard in the field. Back to Chad.
Thank you, Rishi. Our third polling question for today: what is the biggest major problem in your company is facing? A, finding and hiring people. B, combating increased lead times. C, upskilling talent. D, internal communications. I'll give everyone some time to answer this polling question.
We have our.
All right, we're about
results.
83%. Give you about 5 to 10 more seconds. All right, we're going to advance on to the results slide here.
Perfect.
Finding and hiring people, I think that is what we have experienced as well. And I'm going to move, how we have solved this problem. As an example, in this company, this is a medical device company. Lean is about eliminating waste in a process. And so if you are doing something in 20 hours, can you do that in 5? And I'm not kidding about these things. This is what we do, right? It's not, reducing 20 hours to 18 hours. How can you do that, reduce that from 20 hours to 5 hours? And this is actually an example where we did that. And so by eliminating that waste in the process, you were able to increase the throughput of this company from 200 million to 400 million without any additional capex, buildings and tools and all this stuff, and without adding additional headcount. Of course, to the left, you see all the tools we use. But pretty amazing, once you start on a lean journey, of course, after 400 million to 700 million, and this is a 100-year-old company, 11% CAGR to 26% is amazing. I mean, this is pretty amazing growth. And a lead time reduction, and what we did in this is a smaller client. In this case, it was 12 million was the annual sales. By reducing WIP, now you'll see the timeline how a Kaizen event started, and people went through green belt training, all that stuff. You're able to reduce their WIP by 80%, and the lead time reduced from 6 weeks to 2 weeks. And guess what? Their orders went up. They went from 12 million to 23 million because the lead time was low. And guess what? The people did not work harder. They were working 6 to 7 hours a day, as opposed to 14 hours a day when they were doing 12 million. Amazing story. Would love to share more details if anyone wants to learn more. And upskilling, the question on upskilling on the side, people have contacted us and we've been doing it very successfully. One thing which I'd like to point out is a lot of people are doing the lean management, training and things like that. How do you do lean execution, which is extremely different from lean, from project management? And so using lean, and if you're doing project execution, you're going to be a lot more successful than project management. Okay, and in this company, we use lights. This is massive. I think this is, at that time, it was 40 billion, again, regulated kind of industry. And by using an 8 feet by 4 feet, and we use bright lights, this was in a VMI model, vendor managed inventory model, and the forklift drivers were taking 90 minutes to empty a cage, and we were like, and the goal was 30 minutes, and so we designed a very visual system using lights on how everything was done in less than 30 minutes, and the system was designed by the people. We just provided the lean tool, and the change management was really easy. And again, regulated environment, this is the pharma company. How do you reduce a 10-year cycle time of developing a cancer medication to 6 years? By using visuals. And so we had these boards actually in a very common high traffic area. And people say, oh, you sent an email, didn't have the time to read, do we need materials, all that stuff. Whatever the issue, do we need to close a project? Do we need to restart a project? Is the project leading us to nowhere? Those kind of things. We made very visual boards with this, and suddenly the lead times started decreasing. We did a lot of work with this company, pretty amazing results were achieved here. And internal communications, this is actually, there was a picture here of a whiteboard at a cubicle level where on the cubicle wall, this person, one of our clients, we developed this project execution board where all the projects, anyone can see anytime what the progress is, giving people the, hey, how can I help you? I'm having the same problem. All these things were brought to light without emails, without getting permission from everyone, without responding to 500 emails a day. And again, project execution went up. And with that said, I think to use lean, this is one of the companies actually in Nevada, about a 100-year-old company. Everyone knows everything, in the morning when they come in, who's on vacation, what's the hot thing for the day, what lines are running, what are the quality issues, what have been solved, what have been not solved. In this company, you get a promotion based on the number of suggestions or the number of Kaizen events you have participated in. Pretty amazing. It took this company 3 years to get to this stage, but 28% year-over-year growth for about a 50-year-old company is pretty amazing. And this is year after year. The fourth question, over to Chad.
Thank you, Rishi. Our fourth and final question for today: how would you prefer to start your company on its lean journey? A Kaizen event, B, training, green belt, C, lean assessment, or D, series of Kaizen events, big picture. So we'll give you about 30 seconds here to answer this one.
So Kaizen events, are the big high energy, high impact events. Training is, the green belt. A lot of companies like to start with, hey, can you train 25 people in lean? And then, so they have lots of ideas. A lean assessment is a 1 day where we come in and say, here is what all lean can impact. And, and what your priorities are, and, match all those things. And a series of Kaizen events, a lot of companies come up with, the 200 million to 400 million, it was, hey, we know we can sell, we don't know how to produce, can you help us out? And the multiple production lines, they have, all those kind of things. So, some companies like to start with that big picture as well.
Awesome. I'm going to advance to the results slide here.
A lean assessment, that's awesome. It's a 1 day. And please contact us, or anyone else, who you think. And this would be, completely amazing. You will definitely see the waste in your processes, and would love the results you will get. Okay, So, I mean, I think one last question. There were basically two more questions which were asked during the registration process. What's the difference between lean and business process management? None in our mind. Some people try and differentiate. They try and make lean as for manufacturing only. That's not the case. Again, as we said throughout, lean applies to business processes as well as manufacturing processes. There was a question there was a third question on admin processes. This is a very elegant, I know we are at 11:01, a very elegant solution of customer service, where we changed from a beautiful day in Seattle, how may we help you, to a beautiful day in Seattle, what's your account number? Just that saved 5 minutes a call. Pretty amazing stuff in all, whether it's office processes, admin processes, or manufacturing processes. Back to you, Chad.
Thank you, Rishi. Thank you, Steve, Filipos, and Rishi for a great presentation today. If we didn't have time to answer your questions, we'll do our best to follow up with you after the webcast. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window. If you participated as an individual and met all certification requirements, your certification is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy of your CPE certificate will be emailed within 3 weeks should you have any difficulty downloading it now. Here's a link to an online survey where you can provide feedback for today's presentation. Take a moment to complete this survey as your feedback is very important to us. Thank you again for joining us. We hope you'll join us again next time.